Okay, so this class is all about the basics of stock market and technical analysis, which I have come across till date. So the main agenda of this course is to share my knowledge with the people who are around me. So basically, these courses are charged around 5,000, 6,000, and 7,000. I don't want my circle people to pay that amount. I just want to share my knowledge, which I have, so that even they can best utilize the things and they can upskill their knowledge on the share market and they can start earning. So that's the main agenda of this course. Uh, just a second. Okay, let's not waste the time. Let's pitch into the agenda of this course. So, let's start with the basic introduction. What is a share market? So, share market is a place where multiple shares are listed, where you can buy and sell the share. So that's the overall high level of share market. And what is meant by shares? So let's go over the PPT. So this is the basic jargon or basic term given for the share market. A stock market or equity market, a share market is the aggregation of buyers and sellers of stocks, also called shares, which represents ownership claims on a business. They may include securities listed on a public stock exchange, as well as stock that is only traded privately, such as shares of private companies, which are sold to investors through equity crowded fund platform. Investment in the stock market is most often done by a stockbrokers and the electronic trading platform. Investment is usually made with the investment strategy in mind. Okay, so this definition seems to be quite complex. As I told, share market is a place, maybe you can consider as a market where multiple shares are listed. So that's where you will buy, sell, or you will perform all sort of operation related to share market. It's basically a market. And let's deep drill down into the concepts or maybe the jargon which we have discussed right now. Stocks. What is a stocks or a share? Let's say I own a business which is a hotel business where my business is going well. So I want to upgrade my business. In order to upgrade my business, I need some amount of fund to upgrade it. So what I can do? I can do it in two ways. One is like I can borrow a debt from a person or maybe a bank so that once my business goes well, I'll repay the debt. So that's one way. The other traditional way is like I'm the sole owner of the I'm the sole owner of the hotel which I own. So what I can do, I can split my ownership into a multiple chunks, which we call it as a share. So let's say I own my business worth is around 100 rupees. So what I can do, I can keep 60 rupees with me and remaining 40 rupees I can split into a multiple shares. So that 40 shares will be there and common people or maybe outside investors who can buy that share and they can give me the amount. So that 40 rupees I can use for my business development. So that's the main main overview about the stock market. So basically, I'm segregating my ownership and giving to different person. When you own one share of mine, you are also a what to say? You are also a owner of that company. But the percentage varies. Since I own the 60% of my company, you have 1% of rights to take the decision. I have 60% rights to take the decision. So basically, that's how you will give me the money, and I'll use for my business development. And that business development, in case if it goes for a loss or maybe it goes for a profit, I'll divide accordingly with you. So that's the overall agenda of stock market. So basically, I'm splitting my ownership into chunks, and I am giving it to you. You can buy my share, and you can in return you will give me the money. So that's the main agenda or main goal of share market shares. So these types of things are done. This type of mechanism are done by all the things like, as I told, a hotel business. It will be done for a transport. It will be done for a petroleum. It will be done for a banking. Like that, multiple sectors are there. So that combination of everything, we call it as a share market. So in the market, you can buy whatever shares you want. So I hope till now it's clear. Let's move on to the next topic, which is so this course mainly will focus on Indian share market. Then slowly, if there is any doubt, I can give the insights about the other share market or trading related thing. So now let's come to the Indian one, where we have two stock exchange. So basically, as I told, share market, stock exchange is pretty much similar. Like they are the person who owns that share market. So in India, we have two section. One is NSE and BSE. NSE is National Stock Exchange and BSE is the Bombay Stock Exchange. So basically, most of the transactions are done day to day on NSE. Bombay Stock Exchange is the first one, which was founded in 1980s, I guess, 1980s. So where we have around 60 stocks are listed there. Later on, due to the increase of stocks, we have moved to the NSE, which is the latest and upgraded one, where they own a lot of servers, where multiple shares are listed. So exchange in simple term, they are like a server or they are person who are who owns the server where the multiple shares are listed, where will buy or sell the shares. And so as I told, we can buy and sell the share in the share market and the exchange. So how we will do? We can directly go and buy and sell the share. So there should be some third person or intermediate person who should be involving, who will be coordinating between us and the stock exchange. So who is that person? We call them as a broker. So broker is a common term which is used across all over our day-to-day life. So similarly, this person is like a bridge between the buyers or sellers or buyers. So what they does, if you want to buy some 2 shares of Reliance or 2 shares of ITC, so what you will do, you will make a request to the broker. Broker in turn make a request to the stock exchange, and stock exchange will give to the broker, and broker will give it back to you. So he will act like a third person. Since stock exchange can't allow each and individual person to directly access the server and get the buy or sell the share, that might go for a crash. So in order to eliminate that, they have made some intermediate person or some regulation where the brokers are the only person who will be involving to buy and sell the shares, so that we can coordinate with the brokers and do that. So obviously the brokers charge for it. It will be like, it depends on the each brokers. So to buy and sell the share, they'll charge some amount. So what are all brokers we do have in our India. So you guys might have aware of Zerodha, Grow, Abstract, what else? Fires, Mstock. So it goes on, and Paytm Money, like that. Multiple brokers are there. So we need to wisely choose the broker where the UI is it's very good for us to use, and even their buying and selling is fast. So based on that, we need to consider. So I personally suggest, like I'm using Grow and Paytm Money, where the UI is very good. Like you can view the stocks in a well organized manner, where you can buy and sell the shares. But it's up to you guys to do the research on the brokers. So you can buy and sell the shares in any brokers. It's up to you guys to decide. So my personal suggestion is on Grow and Zerodha and Paytm Money, where I feel it's the UI is somewhat better. Yeah, it's up to you guys to decide. And can we buy anything apart from stocks? Yeah, obviously. So there is something called commodity futures and option ETF. So we'll cover this part in the later part of the section. So let's move on to the next section. Okay. So we have something called in Indian market Nifty, Bank Nifty, Sensex. So what is Nifty? Nifty is nothing but index. So as I told, stock is related to a company or a single company. As I told, the restaurant or maybe the petroleum sector, where we have a individual stocks are listed. So this Nifty, Bank Nifty, Sensex, or we call it as an index. Index is nothing but inside the index, multiple shares will get listed. Let's say if we take Nifty, Nifty is something which we call it as a benchmark index. Inside Nifty, we have multiple sectors listed like banking sector, finance sector, small cap, mid cap, large cap, and hotel sector. Like that, we have multiple segregation will be there. So inside Nifty 50, we have a 50 stocks. So based on that 50 stocks, we will have some weightage. So let me show the weightage here. So when you Google it like this, the weightage and how the things are calculated, you can see. This all of the sectors which are listed in Nifty 50, financial information, which is IT, oil and gas, fast moving consumer, automobiles, healthcare, construction, metal, consumer, telecommunication, power. So like this, it goes on, and the specific weightage will be given. So why this weightage is given? So basically, as I told, share is something which is single thing where the movement are captured. But if you go for a index, it has 50 shares are involved. So all 50 will move in different direction. Like some might go for selling, some might go for buying. So based on that, the weightage will be given. So let's say today financial sector all are going up and IT sector are going down. So the what does it happen in the index now? Like 37.5% weightage will be going down and 12% weightage will be going down. So the average will be taken and in turn it will be like 15% the index will move up. So we can say like 15% the value will go up. So that's how the index is and the company. So this is the sector wise weightage. In turn, if you drill down, this is how the company weightage will look like. So Reliance, HDFC, ICICI. So this all are the heavy weights. So basically the moment of index Nifty 50 will be calculated based on this. Okay. Next, we go for a Bank Nifty. So Nifty 50 is top 50 stocks, and it combines all the sectors all over the India. But if you go for specific to Bank Nifty, it mainly focus on banking sector. So similar to the Nifty 50, here also it's an index, and the weightages are given for individual stocks, and based on the movement, this index will move. And but here it will be only specific to banking sector. So similar to Nifty 50, I can show here Bank Nifty weightage. If we go here, it lists down the weightage. So those all are the companies which are listed in Bank Nifty, and specifically the weightages are given. So let me show the weightage. Yep. So this is the weightage. If you go here, HDFC holds 41% weightage, ICICI holds 23% weightage, Kotak holds 9% weightage. Like this, it goes on. So the maximum weightage goes to 41%. So if this index want to go up, so if ICICI and HDFC are in buying state, obviously the index will be in buying state. So if these two are in selling status, so obviously the index will be in selling status. Why I'm telling is like that because nearly 65 to 66 percentage of this stock movement, the index movement is decided by these two stocks. Next, we have Sensex. So Sensex is also, as I told, Sensex comes from Bombay Stock Exchange. So which was initially, which is a very old stock exchange, which was founded in 1960s or somewhere. Let's see. Oh, my bad. It's like 1875. So I think NSE was founded in 1960, 1992. Yeah. So our old stock exchange is Bombay Stock Exchange. We call it as Dalal Street. So whenever a stock comes, they will decide whether they want to list in NSE or BSE. NSE we call it as maybe Nifty 50 or maybe the Sensex. So it's up to us to decide. Sorry, it's to them to decide whether they want to list in NSE or BSE. Sometimes they list on both of these. So now let's go on to the Sensex weightage. Sensex is also a index. So as I told, this all are the sector weightage. And if you drill down further, so this is the company. So if you can see, the companies which are listed in NSE and BSE are pretty much same. So just the stock exchanges are different. So mostly, I would advise we'll go for NSE. NSE is the mostly used stock exchange by all of the brokers or maybe the people who are traded or maybe buying and selling. Because most of the stocks which are about to list, they'll mostly list on NSE because they have the latest server and all the latest technologies are available only in the NSE server. So this is how the weightage. You can just Google it and check it out, like uh, what type of stocks are there in this index and what is the weightage like that. I hope till now it's clear. So summarize that stock. So stock is nothing but splitting the ownership of a specific company or entity and selling it to the third parties or maybe the outer people so that they'll collect the fund and they can use for their business development. So that's the overall high level of stock. So index is nothing but a combination of stocks. So that contributes for an index. So maybe you can consider as a bucket. Inside the bucket will have multiple stocks. So in Nifty it will be 50 stocks, and Bank Nifty it will be around 30 or 12 stocks, and in Sensex it will be 30 stocks. So at high level you can think as it is also a stock. The movement of that stock is decided by the maybe 50 or 12 or 30 stocks in term that based on the weightage. If maximum stocks goes up, obviously the index will go up. If maximum stocks goes down, obviously the index will go down. So that's how it works. So index and stocks. So at the end, you can consider both the things are same. Okay. What is intraday? So intraday, before going to intraday, and we'll consider of our market timing. So our market timing divides into 3 parts. One is pre-market, uh, regular market, and post-market. So vendors are stock market starts. I mean, vendors we can start buying or selling the shares in our Indian stock market. So as I told, I'll be mainly focusing on Indian share market. So that timing is very important. Like similar to as you know, we Indians follow 9 to 6, maybe whatever the job. Similarly, the stock market is not an exception on that. So it's like they'll start by 9 and they'll end by 3:30. So that's the timing. The timing might look very cool. Like you might need to just sit for 6 hours. If you know the trading, you just need to sit for 6 hours and you can enjoy the rest of your day. But you need to start your day exactly by 9. So that's how it is. So let's come to the timing. So pre-market hour. Pre-market hour starts for from 9 to 9:08. So till this time, you can place the order. Like let's say I want to buy some Reliance. I make a bid like I want 10 shares at 30 rupees or maybe 40 rupees, maybe whatever the price it's trading on. So like that, multiple orders will be placed. So based on that order, what they'll do, they'll decide the market opening price. So yesterday the Reliance got closed at 50 rupees, let's say. Today morning, multiple people are betting at 51 and multiple people are selling at 49. So they'll take the average and if multiple people are ready to buy, so obviously the stock, the demand is more for that stock. So what will happen? Obviously the stock will open higher on the specific day. So basically the pre-market hour is used to estimate the opening price of that stock. So once the opening price is estimated, the regular buying or trading hours comes into picture. Where so once 9:08 is completed, 9:08 to 9:14 or 9:15, there will not be any trade. So market will just halt. So exactly at 9:15, the market will open. So that the market price are estimated, so that people like us can go and buy and sell the shares after 9:15 to 3:30. So till this time, we call it as a regular hour. So after 3:30, what will happen? There will be a 5 minutes window. So in that 5 minutes window, we call it as a post-market hour. Inside the during that time, what will happen? Post-market closure. Even buying and selling will be happened. So based on that, the closing price will be decided. So this process keep repeating. So our share market opens from Monday to Friday. If there is any government holiday, till the on that day there won't be any share, there won't be any trading or maybe buying or selling shares will happen. And yeah, so this is our marketing hour. So you can buy and sell the share between 9:15 to 3:30 anytime. So this is our market hour. So inside this, we call it as the intraday. So what do you mean by intraday? Intraday is like if you, so as I told, you can buy and sell a share. So you can do it on a same day. Like you can buy a, Reliance share on 9:15 a.m. and you can sell before 3:30. So that is the leverage or that is the leniency given by our stock exchange. So that let's say in the morning it opens by 50 rupees, you buy the share, it went to 70 rupees and you sell on the same day. So that you got a profit of 20 rupees. So you buy on the same day and you sell on the same day. So that we call it as an intraday. So we have some, so this, as I told, this is Indian stock market thing. So we have something called commodity. Commodity is nothing but what to say, oil, natural gas, and gold. So this kind of things. Even this all are hosted in our share market itself, which is NSE. For this, the timing varies. So from 9 to 11:30 p.m. So similarly, you can buy natural gas futures for some price between 9 to 11:30 p.m. It has a long trading hour. So we'll cover that part later. Uh, so we'll mainly focusing on Indian shares rather than commodities. Commodities, something different, but we can discuss in the later part of our session. So leverage, um, say like this terms are something related to trading specific. Maybe I'll just give the insight. So leverage is nothing but when you want to buy a share, for example, for 10,000 rupees, you want to buy a Reliance share. So that Reliance share for 10,000, let's say it's 40 rupees. So 10,000 divided by 40, that much you can buy. So what brokers are doing? So they are giving the leverage. So leverage is nothing but they are giving a borrow or debt, something like that. So it's like it varies from 1x to 5x. So if you have 10,000 rupees, they'll give 50,000 rupees leverage. So you can buy a Reliance share of up to 50,000 rupees, and you need to square off on the same day, so that you will not pay them the interest or maybe the debt to them. So these are done for most of the intraday thing. So leverage is nothing but the amount what you have for that. The brokers will give the equal amount like 5x. Let's say 5x, so 50,000 rupees. So that 50,000 you can use to buy the share. So let's say if you buy for 40 rupees, 40 rupees share of 50,000 rupees. So Reliance is going for a negative case. So you bought for 40 rupees and it's going for 20 rupees. So in that case, what will happen? So in the leverage is something like when you buy for 50 rupees and it goes for 20 rupees, the brokers will not wait for entire 50,000 to go. They'll keep, let's say you buy 40 shares for 50,000 rupees. Uh, so you have a leniency of 10,000 rupees. If your losses goes less than like greater than 10,000, what they'll do, they'll square off your position and they'll put the penalty for you. Like if you buy for if you buy 50,000 rupees share, uh, and if it goes up, you might get the profit of 10,000 or 4,000. Let's say if loss goes greater than 10,000, they'll just sell your shares. They'll sell your shares and they'll make your balance to zero, or not zero, they'll make it to negative. Let's say they'll make it to minus 2,000. So your 10,000 is gone, and on top of it, you need to pay a leverage fine of 2,000. That's the that's the main thing in leverage, basically. So if these concepts are not clear, maybe you can Google it, and you can reach me out. I think I didn't explain this quite clearly. Maybe when you go for some trading terminologies, I can explain it in clear. What is MIS? So MIS is something similar to intraday only, where marginal intraday square off. So when you buy a share or equity, sorry, share or stock. some index options, you need to square up on the same day. So that is more or less similar to the what the term we call it as a intraday, short-term trading and long-term trading. So short-term trading refers to maybe a intraday or a week or a month. So you buy a share and you hold it for a single day and you'll sell it off so that you will book the profit. So that's like a short-term trading. So it happens for a few days or few weeks so that your profit will be somewhat minimum. But what do you mean by long term? Long term is something you buy a share and you hold it for a month, year, or maybe a decade so that you will have a very big profit and even you'll be stress free yeah you used to people used to hear something like Rakesh Junjunwala who bought Titan for 2 rupees and now it's around 2000 rupees, so that his net worth got increased by 100 crores, something like that. So what he does, he bought the share in 2002 and he is holding still now. Yeah, obviously he is expired, he's no more, but his family people are still holding, or maybe his company is still holding. So he bought the share at 2 rupees and he's still holding. Because of the long term holding only, his net worth got increased drastically. So that's the advantage of long term holding. So it's not like you hold long so that you will have a profit. So you need to analyze the stock which is potentially going to give you good returns in a long term. So that only you will hold. So for short term, it's going to give you a profit in short term so that you quickly utilize that opportunity. So that's on the short term and long term. And these are something like trading jargon, watch list. So as I told, we have multiple shares are listed. So you can't trade, or you can't buy all the shares together. So you will have a specific shares to be focused. So you will add that share to a potential viewing or watch list. So that we call it as a watch list. And what is a long? So long is nothing but you can say a buy yeah, you can say it's a buy. So today my ITC stocks is going to go up. So what you will do, you will buy that share and you will hold. So in trading terminology, you call it as a long. Short. What is meant by a short? Short is nothing but selling. So let's say today ITC or maybe Reliance is going to go down due to some bad results or some negative news. So what you will do, you will sell the share. So that is another term, not only buy the share, you can even sell the share. Like you don't hold the share, you will ask the broker to sell the share. So it's like you don't have a share, you are selling it. Obviously, you need to buy the share in return. So when you buy the share, you need to sell it, obviously. So that's how it's work. Like long means you are buying the share. Once it goes for a profit, you will sell it. So let's say you buy it at 10 rupees, it goes for 40 rupees, you sell the share. So you book the profit of 30 rupees. So the reverse case is on the short. You sell the share at 30 rupees. Yeah, you sell the share at 30 rupees and in turn, you buy the share at 10 rupees. So what has happened? The 20 rupees profit has came to you. So that's how it works. You can buy the share or you can sell the share. So these are mainly related to the trading terminology. Okay, so now let's go to the basic jargon. So we have something called open, high, low, close. So what does open means? So open means as I told, the price of the stock during pre-market hour. What is the price of the stock? We call it as a open price. So as I told today, stock is opening at 10 rupees. We call it as a opening price. And high. High means to extend the stock is reached. So let's say it has opened at 10, it went to 50 rupees and it started falling. So that day, the high of the stock is 50 rupees and low. So once it started falling, it might go to 5 rupees as well. So post 5 rupees, it might go up. So we call it as a low, and something called close. So as I told, we have a trading session. At the end of the day, the stock price needs to be closed after post market. So it might close at 15 rupees. So so in this case, the open price is 10 rupees On the high, it has reached 50 rupees, and the low, it has made 5 rupees, and close, it has closed at 15 rupees. At the end of the day, it has opened and it closed at 15. So it's like 5 rupees profit it has closed. So in the same on the same day, the stock might go up or it might go down. That's something series of process which puts to. We'll come to that part later on. Then we have something called 52 weeks high, 52 weeks low. 52 weeks means like they'll consider for a year. For a specific stocks, they'll give a benchmark of year. So from today to next 1 year, what is the high price of that stock? So as I told, the stock might go up and go down. It goes on series of up and down phase. Let's say today it has made a high of 40 rupees and it keeps falling for next 1 year. The 52 high weeks, the 52-week high remains 40 for next 52 days. So in some case, after some 3 weeks, it might break that. So that the 52 weeks I will change. Similarly, for the 52 weeks low, so let's say the stock falls and it reaches 5 rupees and it keeps going up. So that 52 low week will be 5 rupees. So in some case, it might break that and it might go further. And let's say it reaches 2 rupees and it started going up. So the 52 weeks low will be 2 rupees. So why it's important? So there is something called technical analysis. In the technical analysis, the 52 weeks high, low, and open, high, close, these things are used for that estimation. So in order to move further, these all are the important terminologies which I want to cover. So the types of order, okay, we'll come to this later, like what type of orders are there. Maybe I'll explain with the broker, like how you can buy and sell the stocks. So there are multiple types of order: market order, limit order, stop loss limit, after market order, which we call as AMO order, like that. Multiple things are there. We'll come to that later. Now, so this all are the basic things which I want to cover. So let me know if there is any doubts in this. Okay, I'm closing this session. Thank you.